Good morning, ladies and gentlemen, and welcome to the Van ELLE presentation on the acquisition of Rock and Alluvium. Before we start the presentation, we'd like to submit the following poll. Investors will be in listen-only mode. However, questions are encouraged and can be submitted via the Q&A tab in the top right-hand corner or via vanelle@walbrookpr.com. The company may not be in a position to answer every question submitted today, but will review outstanding questions and submit responses via the IMC platform. I'd like to remind you that this presentation is being recorded. I would now like to hand you over to Chief Executive Mark Cutler and Chief Financial Officer Graham Campbell. Mark.
Thanks, Tom. Good morning, everyone. This morning we just want to run through a fairly brief set of slides to explain the announcement yesterday regarding the acquisition of Rock and Alluvium and the wider trading arrangement with Galliford Try. I'll just talk through these fairly quickly. I hope you can see the slides on the screen. They might be a little bit small, but effectively we've announced that we've agreed with Galliford Try, subject to completion accounts, which would and a DUPE process that would take a couple of weeks with the workforce, to acquire 100% of the share capital of Rock and Alluvium Limited, a well-established piling specialist owned by Galliford Try for quite a few years. We'll come on to a bit more background on them in a second. And simultaneously a 5-year trading agreement with Galliford Try to assist them in the delivery of their internal workload for piling and geotechnical works, and indeed ancillary civil engineering works where it's complementary to those foundation activities. And the logic to this is they would have used Rock and Alluvium for this if only Rock and Alluvium had the breadth of capability that we did. So it kind of builds on those internal relationships, as well as opening up a much wider pipeline for us within Galliford Try than we've ever had before. As you'll know, Galliford Try are a 1.6 billion turnover UK construction group covering infrastructure and the building sectors, and that fits very well with our core capabilities. The consideration is effectively in line with the net asset value of the business. You'll know from looking at results that Rock and Alluvium have not been profitable in recent years, but if you look back a little bit longer, they have been particularly profitable, and that it depends on revenue growth, and because they have a fairly narrow band of specialism around CFA piling, they haven't got the opportunities to offer the breadth of services that we have. So we valued the business on net asset value, and that's the consideration that we've agreed after a due diligence period, and that's spread across 2 payments, 12 months apart, as shown. We yet to complete completion accounts. As I say, that will probably take another couple of weeks, but we're not expecting any complications at this stage at all. The sale and purchase agreement is with solicitors as agreed. All our due diligence has been completed, and we're very, very happy with the arrangements. We should be completed by mid-November. So established in 1963, so this year they are 40 years old. 60 years old. We're 40 years old next year. Rock and Alluvium are 60 years old. So a well-established business. The current management team are also long-serving. The managing director has been there 17 years. He's well known to us and to my team, as indeed are several of his senior team. They have a head office in Surrey, Leatherhead, and an operational base in Kent at Thurrock, which suits very well our sort of regional footprint plans for London and the South East, and not just for this team, but for other opportunities that we've got in the South East, not least some of the rail frameworks that we're bidding. Rock and Alluvium concentrate primarily on residential and commercial, and also a growing pipeline within the sort of public sector, government buildings, schools in particular. You might ask, is this good timing to invest in a business that is quite strong with London residential? Well, we are already seeing signs that market is coming back, and of course we know there's a structural supply shortage of residential stock, and certainly it's been part of our strategy for some time to be stronger in the south and southeast for housing, but also our other activities. strong reputation. They're very well known in the industry. They're well regarded and very well regarded by their customer base, which we don't have the same access to. We've done some careful mapping of this, and although there's some household names there, we rarely appear on the tender or preferred bidder list for some of the London-based major customers that they have had long relationships with. Very experienced team and a workforce very similar to ours, directly employed, a lot of long service, very similar model in many respects. So it's a good cultural fit, we feel, with all the discussions that we've had, and we're not expecting any difficulty with the 2P transition in terms of the terms and conditions at all. And importantly, they've got a well-invested rig fleet, a little bit younger on average than ours. So we see this also as a capex mitigation opportunity, because those rigs will slot straight into our capability. We'll use them to a higher degree. We'll increase utilization, we think, quite significantly. We won't, of course, just limit them to rock and alluvium type works in London. They'll become part of our national fleet, and it allows us to dispose of some of our older rigs. And we believe this will mitigate £1 million per annum of capex for the next 3 to 5 years of investment that we need to have done anyway to replace some of our older fleet. So very familiar with the rigs. We have the same sorts of rigs ourselves. Ours are very busy and have been worked quite hard for the older ones in particular. Graham, do you just want to touch on the rock and alluvium financials very quickly?
Yes, thanks, Mark. So as Mark just touched on, the last few years have been a little bit more challenging for the business, mainly around a reduction in revenue through the pandemic, and then a little bit of disruption around the market in the last 12 months. But I mean, the business, if you go back and look sort of 17, 18, 2019, you find the business with a very healthy profitability. Some challenges, I say, during the pandemic. But all of the losses that have been posted in the last sort of 2 to 3 years, relatively modest, and mainly it is around that revenue decline. When the business is operating up around 20 million, it's been very profitable. Around 15 million, it's as you can see there, it's close to break even over the last 12 months. We feel that with Van Elle's broader capability and the contracts that are broader than just CFA piling, rock and alluvium being able to participate in tenders with broader capabilities than just CFA piling, that should allow us to drive significant revenue uplift from what they've delivered over the last 2 to 3 years. In terms of net assets, if we take out cash and intercompany, which the deal does, of course, exclude, if you look at their accounts, you'll find a very different number, but a significant balance on the balance sheet is an intercompany debtor. Stripping those out, you see from the, as Mark mentioned, 3.8 million acquisition cost as at June, which is their last set of accounts. And they are still in draft form, by the way. But the net assets excluding cash and intercompany was 3.7 million. So to Mark's point, broadly, we valued the business on a net asset value basis. Importantly, again, just sort of touching on Mark's point there around the residential sector short-term challenges, absolutely they are there, but it is important to say they've got a strong secured order book. So we're expecting that in the second half of the year, we should start to see an uplift in momentum, and projects that have been delayed, and we've seen that across our business as well, of course, delayed projects will start to come forward and start to be delivered, and we expect that to happen in the second half. And again, as I say, that will expect that to drive some momentum as we integrate our businesses. Yeah,
that's right. So we think the timing's quite good for and we've noticed as well with our relatively modest London operations, delays now starting to turn into project starts. So we think the timing's quite good for this business to kick on now, particularly sponsored by our wider capability and capacity. So we've probably touched on a few of these points around strategic rationale, but it gives us an immediate southeast presence that we have never had, and we have several business opportunities that we've been planning for some time in other divisions as well, in and around the southeast. I mentioned rail. We're bidding the Southern Framework for Network Rail, for example, and we'll need a southern base for that. And it gives us an immediate customer base that we're not currently serving, and we would struggle to break into an established player like Rock and Alluvium and one or two competitors they have that are very, very focused on this particular market. It is the biggest market in the UK for piling, after all. London is. Also, as I've mentioned, we assess there are positive short-term, actually, and certainly into the medium-term prospects for the sectors that Rock and Alluvium are operating in, and we see the same in our core business. High-quality rig fleet, I've mentioned. Mitigating capex plans, I've mentioned already, and the opportunity to increase utilisation of this fleet too. What we haven't really explained very well yet is the fact that with our additional capabilities, the opportunities for Rock and Alluvium open up significantly. So as Graham said, they focus very much on CFA piling. Most projects involve at least two different techniques, and with our ability for rotary piling, deep CFA, sheet piling, driven piling, and smart foot in the residential sector, the pipeline of opportunities that Rock and Alluvium can pursue with their customer base that they're well established with, is very, very exciting. And our team are ready to sort of fold into that sort of joint bidding immediately. And that really sits with improving market prospects, we believe, particularly in the residential sector going forward. There are synergies as well, as you would expect. We've been modest in our statements on this so far, but of course we've got a synergy plan, and we do expect cost efficiencies, both within the core Van ELLE general piling division, as well as potentially within the Rock and Alluvium sort of cost base today, including, for example, the shared services costings that they have from Galliford Try, some of the operational costs that would be duplicated. We'll look to go with the strongest possible personnel, and if those are more recently appointed people in Van ELLE that aren't as good as the Rock and Alluvium guys, then that's absolutely fine, because there is a very, very experienced workforce here. So we're looking to, in a scarce resource sector, we're looking to keep the workforce, but there will be weaknesses in different areas where we'll look to make the most of the skills that we're acquiring. The Thurrock depot is certainly going to be useful for us for other activities, not just the existing Rock and Alluvium plant maintenance yard. Transport is also very difficult around the country these days. You might know that movement orders are increasingly complex. Getting in and out of London with HGVs and low loaders is difficult. So having that sort of interim transport stop-off area for us to load and unload rigs and break our movement orders down, is actually something we've been thinking about as well, rather than running everything from Nottinghamshire, into London and the southeast when we are busy in that region. And in terms of performance, we expect this business to very quickly fall in line with the margins that we typically earn in general piling. No reason it shouldn't, and to grow a little bit without too much difficulty, and be margin accretive, profit accretive in FY25. We've given ourselves a little bit of breathing space in the balance of FY24 to integrate and deal with some of the synergy work, and so on a prudent basis. We're not going to increase forecasts for FY24 at this stage, but going forward we're very excited by the prospects that this will bring. And that's before we get to the trading agreement. So the trading agreement goes hand in hand with this. The two are dependent on each other. We've agreed a 5-year arrangement with Galliford Try to effectively be a preferred in-house partner for the delivery of their geotechnical piling and ancillary civil engineering works. It's not exclusive to us, and it would have been unreasonable probably to expect that it could be. But we are very, very confident that this will be of material revenues, and we will be building very strong relationships. And there's a strong trading agreement that's been incorporated into the sale and purchase agreement that sits behind this and defines a process that will operate within all the business units within Galliford Try to involve us and negotiate with us effectively where we can, both parties, to maximise the value that we can bring, as well as the opportunity that Galliford Try can bring to us. Because the point here is it's a win-win. We can bring significant geotechnical expertise to the early stages of projects and then de-risk them, as well as help Galliford Try with the best solutions, whether that's cost effective or low carbon, or saving time or winning bids in a way that they can't really do at the moment because they're dependent on a relatively fragmented supply chain. So we become a much closer partner, adding far more sort of value than perhaps would be available otherwise, and we're prepared to put a lot of effort into making that work. It covers all their divisions, and their divisions align very well with our core capabilities, and we know them well as well. I've got personal relationships amongst the senior executive team in Galliford Try, and our chairman, you might remember, is also the ex CFO of Galliford Try several years ago. So there are some good relationships there already in place, and myself and Bill Hocking, the CEO of Galliford's, we've known each other for a fair few years as well. So we're both determined to make this work. And myself and Bill will oversee this trading agreement on a 6-monthly basis to review its performance and make sure it's working, and tweak things if for some reason there's any local leakage. And I'm sure we'll have those constant sort of tweaks that are needed just to kind of get everybody to fully buy in, because they're a big organisation. But for us, it strengthens certainly our highways pipeline. Galliford have several sizable highway schemes that we probably would have priced anyway, but this puts us right in the sort of effectively in the preferred position. And very importantly, it propels us into the water sector, which is a target growth area for us ahead of the next AMP period, where increased investment is well known with the UK's market leader in the water sector. Galliford's are involved in more of the infrastructure frameworks than any other single company, and that's a core part of their strategy. So we'll be going with them, adding particular low carbon solutions, which is a big driver for the water sector, into their foundations and minor civil engineering works. The work mix will be blended across general piling and specialist piling, so better even than the rock and alluvium business I've just been talking about. The margin mix here is better, because I would anticipate at least half of the work will be done by specialist piling, as opposed to rock and alluvium sitting in with general piling doing that more sort of open site work. So good margin mix expected from this trading agreement, and of course we'll be agreeing the price together, so it's a low risk model as well, without lots and lots of competitive tendering. We've put a prudent assessment of £10 million per annum. I'll be disappointed if this isn't 20 million per annum. I think their market internally is 25 to 30 million of relevant work. So you can see the size of the opportunity. And of course, it's subject to performance, and so it should be. We've got to deliver and perform and look after those relationships and add value. There's a balanced scorecard that sits behind the trading agreement that measures all of this, that we've designed, and Galliford Try totally agree with. So we've got to, this isn't going to be just us getting the work no matter what. We've got to perform, which we know we can do very well. Oh, and that's us finished. That's a summary of everything. Sorry, a bit of a sudden finish there. I hope that explains all the key points.
Thank you, Mark. Thank you, Graham. It looks like a very neat fit. So a question we have in, which I guess looks at the origination of the deal. How did you source the deal? Was it a competitive process?
No, it wasn't. It was negotiated after a conversation that Bill and I had several months ago.
Great. Well, there you go. That's a super short answer. Okay, well, look, I think that we've covered the majority. Hold on, quick question in from Toby. Oh, it's quite detailed. Hold on. Yes, we may have to respond, Toby, offline on this, because you've got some quite granular financial questions in there, which I think might be hard to address just off the cuff. Would you agree to that, Graham? Is that?
Yes, I'm happy to take those offline and publish. We can publish some answers on those just shortly after the presentation.
Okay. Yeah, Toby.
Thanks
So
for the question, Toby.
back to you on that. We'll sideline that one. One further question, just on M&A strategy. You've now made 2 strategic bolt-on acquisitions, with Screwfast proving to be a successful deal. What are your aspirations for further M&A, and what does the pipeline look like? Maybe we could just tackle that one.
Yes. So I haven't got an acquisition team working on a long or short list of targets at this stage, and we are aware that perhaps we need to be slightly more strategic about identifying targets. But within the divisions, we are now identifying gaps and potential targets that we want to follow up with further conversations. I've said before, the main criteria that we're looking for would include regional expansion, and this is exactly talking to that particular point, and niche gaps in our capabilities. This doesn't plug a niche gap, but it certainly opens up significant growth opportunities. So we're very pleased with this particular model. I wouldn't be surprised if there could be more opportunities like this, where because Galliford's will rightly say that this perhaps is not a business that they can easily grow and support as a general contractor. It's not strictly core. And how do they invest in it and turn it into a market leader? Probably quite difficult. So I wouldn't be surprised there are other main contractors that might also have a conversation about a similar approach, and we'd be very interested in that sort of thing. I've long said that longer term customer framework arrangements is the very best way for us to grow our business, and this is a very important part of that. But otherwise, it would be niche capabilities in high margin areas as well. And so we are still looking at targets in strata and rail and specialist piling. And those would be most likely the areas that we would want to bring forward when we find the right opportunity. And we still talk to 1 or 2 companies at any point in time. And during the course of the last 12 months, we will have spoken to 6 or 10. And we've done due diligence on a few of them, and we've been very selective and quite disciplined about it. And we're probably going to continue to follow exactly that pattern.
Great. Okay. A couple of quick questions. Sam asks, how much of Rock and Alluvium's revenues come from Galliford at present?
Well, the good news is very little. So no more than 1.5 million.
Right. Okay. Philip asks, you mentioned the south being important for rail work. Is there a specific project you have in mind?
Yes, we're bidding Network Rail's southern region framework for CP7 directly as a part of their procurement model that they've created. There's a series of framework roles for specialists, which is not replicated in every other region, but for southern, we're down to the final stages of that. So no guarantees just yet. It's still early, I guess. But that would mean that we would be permanently in the southern region with Network Rail doing piling and related civil engineering works for up to 10 years if we're successful all across the southern region. So we'll be using the Thurrock depot for that as a base. And an office in Leatherhead would be very handy too. So we've taken that into account. We haven't secured that yet, but if we are, we have a reasonable level of confidence. But if we are successful, it will fit very, very well on top of all the benefits I've described.
Yeah, great. Okay, so we'll come back to Toby on his question. There's one final question here, which you principally covered, which is how will you deliver work arising from the trading agreement? Will you incorporate a mix from the existing Van Elle group? And I think your answer was yes, but would you like just to confirm that?
Yes, we would do hopefully practically all of the ground investigation work that Galliford Try need to do through strata. We would do a lot of the open site piling through general piling, and using the Rock and Alluvium team and their relationships that they have too, because of course they've known each other for quite a long time, even though they don't do very much of it, because Rock and Alluvium are quite narrow in what they can do and quite geographically constrained. And specialist piling and screw fast will play a big role here as well. So a lot of the work we do in water will be screw fast led, and work that we do around some of the more complex schemes, the wider specialist piling business will be involved, and our housing division will be involved. So I mentioned SmartFoot in particular, which of course is an important product that the housing division focus on. There are frameworks that Rock and Alluvium have with the likes of Vistry and Berkeley and Bellway, all in the south and southeast, that we don't have. Don't forget that Vistry was created out of the combination of Galliford Try's previous housing divisions and Bovis Homes and Countryside. And those are all relationships that actually there's quite a lot of synergy there. And we're expecting to make some progress with those in the coming weeks. So the housing division's got a big role to play as well. So almost all of our business, apart from the rail division, because Galliford Try don't really operate in rail.
Great. Okay, super. One very final question from Sam. How much financial scope do you have for further acquisitions?
I can take that one, Mark. Look, I think the reality is that we have been constrained over the last number of years with operating cash flow being diverted to repaying our significant debt levels. And pleasing to be in a position now of having effectively zero debt. We've got about 100,000 left on one hire purchase contract, so insignificant. There are 3 short-term leases remaining that will come along with Rock and Alluvium, so that won't add to much of the debt profile. We sit with very roughly at our low cash point 16-17 million of cash headroom. And being mindful of sort of normal working capital movements, that does constrain us with what we can do without a further funding raise. We understand that, and that's one of the reasons that we focused on these sorts of bolt-on acquisitions that can hopefully drive shareholder benefit without stretching the company too much. Again, it's another reason why we've negotiated the payments over a 12-month period. So really, I think, yes, there is still some capability to drive further acquisitions. They will need to be, in the absence of further funding, they will need to be at this sort of modest level. But could we do something of this scale and size once a year? I think yes, we've got broadly the capability to do that, but not to stretch ourselves much further beyond that, just because of the headroom that we maintain. Obviously, noting the point that the balance sheet is an awful lot stronger position than it was 4 or 5 years ago.
Yeah, great. Okay, so that leads on to this question, which is: are there any gaps geographically or gaps in technologies you still feel you need to add post this acquisition?
I don't think geographically we have any remaining gaps. This was one that we've long said that we have identified and would like to do something about. We have a base in Scotland, a base in the northwest and the northeast and the Midlands, and this complements all of that very well. You could imagine, I mean, the chairman will kill me for this, but you can imagine we might make an acquisition in Canada one day, but we need to give it a couple of years, I think, to really get up firing on all cylinders, which we're well on with. But not in the UK, no. In terms of technology, yes, there are some. Probably, I'm not going to bore you perhaps now with some of the examples, but yes, there are some areas, especially around specialist piling and niche skills in rail and in strata. Those 3 areas I mentioned earlier where we do see gaps, and we could provide an even wider offering, and particularly in rail. Reduce the cyclical nature of the very niche works that we do by blending other capabilities with it, which we do now with civils to some degree, but I think we could find other areas as well, and we have a list of these things. So in short, yes, there are in those areas, I think.
Great. All right, super. That's a lovely place to stop. Thank you, Mark. Thank you, Graham, and thank you all to all investors for their questions. The feedback is important to the company, so you will be redirected post the close of this presentation to provide your feedback. Many thanks for that. If you would like any further information on Van ELLE, please do get in touch via vanelle@walbrookpr.com. In the meantime, thank you for attending, and we look forward to updating you again soon.
Thank you.